Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. All right, so crypto this week. Bitcoin futures-based ETF gets approval. Okay, so that's the big story. That's what the whole market's been all over for the last few weeks, and it's starting trading today, right? So the Pro Shares one, I believe. And you know, as of Friday, that was pretty much priced in, right? So you saw that big spike on Friday into the 62.5 area. And that was because the Bloomberg terminal pretty much started publishing the contract specs for the ETF, right? And it's pretty much suggested it was a done deal, right? Bloomberg weren't going to do that if they hadn't got the nod that it was happening, basically, right? So that's what the market basically factored in and priced in. And then, you know, all the hype and speculation about this over the last few weeks has been driving this price appreciation, but now it really does feel, you look at, we kind of got nowhere since Friday, and it does feel a bit of like an anti-climax now, right? So, and everyone's kind of critiquing why this ETF is such a rubbish product, and that retail investors shouldn't really touch with a barge pole due to the roll cost that you're going to pay for that contango that the futures always trade at a premium to spot. You know, if you're going to hold it for long periods of time, you're going to underperform Bitcoin's price appreciation massively, similar to like USO, the oil ETF underperforming the actual price of oil. Same sort of problem. You've got all these intermediaries that are coming in to slice a little bit of money off the top. So just Wall Street's way of getting money off the retail guy, if that retail guy is going to go and invest in this ETF, basically, right? So people are like, you know, criticizing Gensler, saying he supposedly likes the futures-based ETF because it provides investor protections. But if you actually look at it, it's just nicking money off the investor, right? It's not really, okay, it might provide protections, but like if you get your head around the idea of just holding your own crypto or holding it in something like Coinbase, that is a well-established, you know, company now that probably isn't about to go pop, then you're going to have a much better exposure that's not going to erode value for you, basically, right? So that's the idea. And then you've got, you know, you've got the more optimistic view that this approval is just a stepping stone towards approving a spot-based ETF, right? A physical ETF, and that, you know, Greyscale have applied to convert their trust into an ETF, right? So the big question remains as to whether the SEC is going to approve that and be as friendly to that as they have been to the futures ones. Remains to be seen. Yeah. But if we look at the chart, you know, Bitcoin's kind of hit resistance at around 63. If you look at the momentum indicator, it's turning south as we're approaching those highs. That's not great in terms of seeing a bearish divergence. So if we were to get a pullback, for me, like the obvious support areas are going to be 57 and 54. And that'll be healthy, right? We've had a really strong impulse move from 41 up to here with very little pullback. You know, a move into this support zone somewhere around here would set us up nicely for then a next move higher to take out those highs into year end, right? So for me, that's what I'm looking for. I've taken down quite a bit of my exposure. I had been playing this catalyst. I had been playing this rally. I started to trim and take things off end of last week. And now I'm starting to, point a little bit to the south on my positioning to try and play opportunistically a bit of a pullback to give me then bullets to buy any dip that I get. Right. So that's kind of my setup and what I'm thinking out on Bitcoin. If we look over to Ethereum, the relative pricing, still showing Ethereum to be relatively heavy. If you look at the Bitcoin Ethereum cross, it's kind of approaching this major support level. Still got a bit of downside here, maybe 5% underperformance would get us into that zone. And then you'd probably be licking your lips and trying to buy some Ethereum, basically. Ethereum absolute price here, still struggling to get above 4K. For me, that's the big pivot level. If it breaks 4K, you probably close your eyes and buy it because the run to 5K will probably be swift. It's similar to what we saw on copper last week. Maybe that you'll get a similar sort of move. If we get a pullback, I think 34 is probably your first support zone, and then your bigger support zone is in that 31 area, basically, right? So if you're lucky enough to get it down to 31, then you'd definitely be setting up for some longs, probably in December or maybe early next year in terms of the maturity that you pick. But that's what we'll be looking for, right? We'll be looking for a dip in both Ethereum and Bitcoin to set up for the rally. But for me, it just feels like right now the consensus is very strong that we're just going to rally directly into year end from here. And I don't think it's going to be quite as easy as that. That's my suspicion. Yeah. Okay. So that's the charts and that's the general kind of headlines that we're seeing in crypto. If we look at the on-chain stuff, what I'm seeing there. So the latest rally, we've definitely seen a change in behavior of long-term holders. Okay. So the long-term holders are, what have they been doing? They've been spending more coins, which is typical as we approach all-time highs, because they tend to be buyers of the dips and the weakness in the market, and they tend to let go of it on strength. So that's fine. That doesn't necessarily mean that we've topped out, but it's just interesting to see a change in their behavior. Because generally they've been in accumulation mode, right? So you can see here, actually, right. Let me bring up this chart. Yeah, so this chart here kind of shows you long-term hodling plus accumulation. That's kind of the big green bars. And you can see the kind of big green bars getting smaller, right? So this is that decline in net position change is a sign of those longer term holders kind of letting stuff go. Okay, like I say, it's not an immediate panic signal, but it's just interesting to see that these guys are starting to lighten up, and often they're the smart money. So they're going to kind of get out of the market early. You might get one last blow off into year end where, as retail chase it, because retail aren't really chasing it right now, I don't think. I think it could certainly amplify into year end, and then that might be the top. But right now, we're seeing some of the smart money exiting. Okay. And then exchange outflows have also slowed to neutral. So a lot of exchange outflows, which is people hodling and taking money off exchanges. And then now we're starting to see some of that coming back, which is obviously some of these long-term guys happy to let go of their coins. Okay. So more coins coming back into supply from those longer term holders. Okay. Open interest on options has absolutely exploded. Okay. And that is interesting as well, because, if we look back at that, what that signified in the past, you can see here, we're back to kind of May levels, right? And often a big explosion in speculative option trading kind of, again, signals a bit of a blow off. Okay. Now, personally, I think some of the option flows were driven by the fact that we had a very defined catalyst here in terms of the ETF approval. Okay. And you've got this positive seasonality, like triggering people to want to buy relatively short dated options to play it. Okay. So I'm not necessarily as bearish seeing that flow exploding the way it is. Futures open interest is also pretty high though. although volume has not increased to the same extent. So the increase in leverage that we're seeing that's being built up by this increase in derivatives flows does leave the market more fragile to liquidations. Yeah, it's just that there's room for that to get worse, I would say, right? You look at some of the futures funding rates, they can go a hell of a lot higher than they are now, like they were back in sort of, between March and May time. But if markets do start to retreat, there is some fragility there, and there are some leverage positions there in futures that could be liquidated. So just be aware of that and know that that risk is there, I would say. Yeah. But that's really it from the on-chain, from my perspective. I haven't really seen a lot else to kind of make me concerned, right? So now let's look at the volatility analysis. Okay. So what's been happening in vol? So in terms of vol, obviously we had this big spike. So if we look at this 7-day maturity implied versus realized, into Friday, we had this big spike in the 1 week options, right? It got as high as 125 vol. It's pretty extreme for 1 week options in Bitcoin. And the realized didn't do that much, right? The realized was fairly orderly, okay? So that was a big risk premium that was piling in on Friday, thinking we might get some crazy move once the ETF is actually launched. I was kind of telling people on Twitter that was a bit of a fade. It looked overdone to me. And then literally within 24 hours, it's collapsed back to like 85, right? So clearly that was a bit of a fade, and that worked in terms of the implieds, mean reverting. Term structure, if we look at what that did, now that had flattened a bit and gone a bit inverted into that Friday spike. But look, you can see here, if you look at it on a 1 week basis, what it's done, you have got a move up in the front, but the move in the longer part of the curve is pretty significant as well. And that's really happened in the last few days, right? So you've had flows coming in, particularly like in November, December, and March, that have really driven the longer part of the surface higher, right? So people piling into year-end type plays to play that move in Bitcoin that they're anticipating, okay? So very definitely flow driven, and you can kind of see that if you look at this great tool from Genesis Fold called the block sniffer. And it basically looks at, on Paradigm, where all the big blocks go up in options flow in crypto, kind of it shows you where it is, right? So you can see that there's a call bias, 57% versus 42. So we're biased towards call flow, okay? And if you look at what maturities people are trading, so you've got the 5th of November, 70,000, that big pink bar. So the bars above the zero line are calls. The bars below it are puts. So you've got, the 70K area, large chunk of flow there on the 5th of November. And then in December, you've got the 100K and the 120K strikes. So those are the kind of areas of choice. And given the shift up in the Vega part of the curve, you can see that's kind of net buying of volatility, most likely, that's going on. Okay. So when you see where the strikes are that are trading, and then you see the direction of the vol, you kind of know what people are up to, right? So that's what's been going on. Yeah. If we look at what's happened in skew, you've got, let's have a look here. If we bring some of the other maturities in, all the skews have flipped decidedly towards calls now, right? So you had shorter dated trading more for puts. So if you look here last week on Friday, puts were pretty extremely bid on the 1 week. So as we were rallying, people were buying protection against being long, let's say, in the short end. But now that's all collapsed back down. You've actually got pretty much every maturity trading for calls. I mean, the 1 week stuff's kind of moving around close to zero, but everything else is for calls. Okay. Now, how would I explain that? I would probably say, well, people who'd piled into futures for the ETF news are now probably happy to let those futures go because you've had that move, but then switch back into call options to participate in further upside, but not necessarily just hold on to futures, right? So I think that's probably providing some of that bid towards calls as people switch back from Delta One into optionality to participate, right? Now, what does that mean? That probably means short dated puts are probably relatively cheap, right? So, you know, given that I'm anticipating a bit of a pullback from 62, maybe to 57 or even beyond, you know, I think those short dated puts are probably providing a bit of opportunity on a relative basis to the calls. So you may want to look at risk reversals if you agree with that view and you own crypto. If not, you know, looking at put spreads, maybe put ratio structures to play the downside looks okay, because the absolute level of the vol is still 80, 90. But yeah, that I think, you know, I think some of those puts maybe in the 25, 30 delta region are starting to present some value. Yeah. Okay. And then what else? I mean, Ethereum flows have been pretty notable. So if we have a look at, I mean, and literally in the last 24 hours, Ethereum flows have blown up, right? So I'm going to show you the block sniffer, not the block sniffer, sorry. I'll show you this one. So this chart here shows you the volumes that have gone up in the last 24 hours. And we've had about 11 to 12,000, which is a chunk in Ethereum, on the March 15K calls. Surprise, surprise, that's the exact option that Raoul Pal was saying that he's buying, right? So I don't know whether it's him or whether it's his followers, but some people are buying those calls in size, right? To the point where if you look at what happened to the curve, the March vol has absolutely exploded by about 10 vol points in the last 24 hours, right? So there's been, that's what 12,000 options does. It moves the curve by 10 vol points, right? So that March, particularly the March upside, is looking super inflated. It's now at 140 vol. Personally, I think it's a screaming sell in vol terms. I mean, you know, that the premium on those options, for that to multiply by 3 or 4 is going to require some serious rally in Ethereum over the next couple of months, which obviously can happen. But I just feel, for me, if you want leverage to your premium, you're much better off buying things like November 4.5 to 5,000 strikes than you are buying March 15,000 strikes, right? Doesn't make a ton of sense to me. I just don't think that's a good, efficient way to be playing that bullish view in Ethereum, right? So I'm a seller of it. I'm happy to sell more the more it squeezes, but personally, I don't think it's a good item. Yeah. Sorry, Raoul, but that's just the way I feel. Okay. And I had been running short calendars. I've been running short deck 8,000s. I've been long Octobers against. And after I saw the price action in Ethereum looking not so amazing, I started taking profit on that. Luckily, that was quite good timing because this squeeze in the March has actually dragged up deck as well. So I haven't got too buried in that because I wasn't too short that deck because I'd closed a lot of that out basically, right? So that's kind of how I've managed it. And now that the vol has popped 10 vols, I'm in there selling March again or increasing my short in March, and I'm owning November against it basically. So I think I've moved from an October, December type structure to a November versus a bit of December and a bit of March, because that's where the juice is and the curve is going steep again. And the curve is actually, normally the curve steepens by the front collapsing. Here, the curve is steepening by December and March exploding whilst Ethereum isn't moving. That's just, there's no other explanation to that other than the flow is just pushing the market. And therefore, that's usually when it's good value to sell volatility into that type of flow. Now, obviously, you've got to be careful because if you get too short that stuff and the market does rally and there's a squeeze on vol because the whole street is short that area, you could get burnt, right? So you've got to make sure you size it so that you don't get margined out of that position. But right now, it's presenting quite a good opportunity and it does look very expensive. Okay, so that's my take on Ethereum vol and what's going on there. All right, so that's me done talking for now. Why don't we hand over to you lot to ask some questions. We'll talk about your own trades and what's going on. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.